Hey, good morning, folks. It's almost 9 o'clock in New York. Let's see what the markets are doing this morning. What I'm looking at in my personal research is a new idea to me that the 1930s financial events and Great Depression kicked off with a global collapse of debt. There was a peak in the global debt market, bond market, and that collapse actually preceded the stock market crash and subsequent events. Why do we care? Well, because in China right now, we have Evergrande with $300 billion worth of acknowledged debt that it appears they're unable to pay. Back in November, Federal Reserve was warning that trouble in the Chinese real estate market could damage the global economy. And so anyway, the reason I am looking at this chart is because I am pursuing the idea that Evergrande is the leading edge of a global debt collapse. And as we can see, this is today. That's yesterday. Evergrande is seeking to delay more payments. They've already missed multiple payments. They're trying to continue that game. One of the interesting things to me, I'm a real estate investor, so I have a fondness for real estate. One of the things that intrigues me about the real estate market in China, evidently, is that I'm using air quotes around investors. Real estate investors in China only want to buy new condos. And with that mindset, they never rent those condos out because then they would be used condos. And so supposedly right now, there are 70 million, and I'll repeat that number, 70 million vacant condos, air quotes again, those are investments. If you look at the percentage of the people's wealth that is invested in real estate, it is well over 60% in China. It's the highest place in the world as far as the people, where do they have their money invested. In the States, it's right around 40% versus 60 plus in China. And so anyway, the Chinese real estate market, in my estimation, is quite fragile. And so debt issues in the Chinese real estate market are worth watching, in my opinion. So let's do the charts. This is gold in the daily time frame. Obviously, we're seeing some strength this morning, but we're still in this support resistance zone where it's reasonable to expect volatility, choppy action. Obviously, the markets are a little bit uncertain about where we're headed in 2022. So we're shaking some of that stuff out this week. You see that full-on bull mode in MACD. We're on a buy signal. Energy is elevated. Gold's looking just fine, in my opinion. Silver, it's a little bit perky this morning. Again, just looking fine. Dealing with resistance at the 50-day moving average, which is coincident right now with the upper median line of this Andrews fork. So anyway, obvious resistance level there. Mining stock, just not going to do anything exciting until the metals do something. I would point out that they're holding up pretty well, given everything that's going on in the markets right now. The mining stock sector is holding up fairly well. Bitcoin, my proxy for crypto. Bitcoin, it ain't looking very happy these last couple of days. Clearly the 20-day moving average is acting as resistance. And it appears that the median line of this fork is also, that's an Andrews pitchfork there, also acting as resistance. And so we'll see what the next driver is for crypto. Can they get another short covering rally going? Maybe. Here's the dollar, a little bit weak this morning. We don't want to read too much into that. It's still, the big picture here is this just an ongoing sideways consolidation. Again, that looks like a market waiting for direction to me. This is the 10-year Treasury note, the yield on that note in the weekly time frame. So I wanted, with the volatility in this market, I wanted to look at a bigger time frame. And so here we can see that yesterday's move, day before yesterday's move, got us up into this resistance level. Well, it was sort of support way back here. Clearly resistance, resistance. Now we're testing it again as resistance. A break through that level obviously puts us back into 2% as a target. And, with the level of debt present globally, rising interest rates are not a good thing. If you're an investor looking for fixed income, rising rates are a good thing. They are a good thing. So here we are. This is the yield on the 10-year note, daily time frame. We can see, so there's yesterday's, as I suggested yesterday, we might call that an evening star. Today's action is still undecided. It's early in the day. Soft this morning, but again, MACD bull mode on a buy signal. Energy is very elevated and still rising. So I would not assume that that was a peak right there. Although it does, we could look at that as being a triple top, 1, 2, 3, potentially. Equity markets yesterday, they're trying to continue to break out to new higher levels. It's only money pumping that's causing these equity markets to go higher, in my opinion. If you feel comfortable investing markets that are only supported by the printing press, that's your business. That's not how I choose to invest my money. Here's the Dow pushing up into resistance at the upper median line of this modified shift pitchfork, obvious resistance level. Nasdaq, not happy. Typical, tech stocks don't do well when interest rates are rising or elevated. And so right now we clearly have had rising interest rates and they are remaining elevated today. So not surprising to see weakness in the Nasdaq. Got a couple of mining stocks open this morning. For the most part, they aren't very exciting to look at. A lot of the junior mining stocks have gotten beaten pretty bad in the last couple of months. But SK is still looking pretty good. Accumulation distribution. So for whatever reason, investors are holding on to their shares in this company and not letting them go. Dolly Varden, about 2 weeks ago, they released some of their latest drill results and they had almost 50 ounces of silver per ton of rock. That's some darn valuable rock. And so I've talked about Dolly Varden a number of times. They're up in British Columbia, got an excellent land package. Oh, and they just purchased one of their neighbor properties, mining company, and increased their land holdings, and their resources in the ground, which makes them an even more valuable or likely buyout target. Dolly Varden is surrounded by, I believe it's Hecla, essentially surrounding all of the Dolly Varden land package, which makes them a buyout candidate. Newfound Gold, they're looking good. Remember that they just started trading on the American stock markets a few months ago. Trading's going pretty well for them. Obviously got overexcited back here. We've got this correction going on. Perhaps are ending that correction. What do you do with the mining stocks right now as an investor? And that's a darn good question. And it really depends on what's your position on the precious metals. Are you looking at them as a speculative investment? Are you looking at them as financial insurance? It really depends. And so I don't want to give some blanket advice that's not appropriate for everyone. That's all I got this morning, folks. I'm going to go see what the markets do when they open here in a few minutes and wish you all a fantastic day.